Nigerian Railway Corporation is gearing up to revolutionize movement of cargoes by rail. Disclosing this corporation's strategy to amplify the frequency of cargo movement by rail, Managing Director Mr. Fidet Okhiria says plans are on the way to enhance the rail link between Lagos, Kaduna and Kano. TVC News senior business correspondent Ifunaya Eze reports.
With Nigeria grappling with infrastructural challenges, efficient goods transportation is paramount for economic prosperity. Mr. Fidet Okhiria, Managing Director, Nigerian Railway Corporation, emphasized the inherent advantages of rail transport, citing efficiency and cost effectiveness as pivotal factors driving the corporation's agenda. He explains how it has become strategically imperative to increase cargo movement by rail.
Between now and end of the year, we are able to link the APMT terminal so that the 3 track will be available, so that you can put 2 3 trains, be loading 3 trains simultaneously, because we have the facility to move, the capacity to move those trains out simultaneously. At the same time, even within the 5-10 minutes, we can move train in and out. So we also hope the going by rail from Lagos to Kano, Lagos to Kaduna, moving freight as time goes by, I think we'll be able to move regularly and deliver, most especially freight to the north, in and out of the north.
However, hurdles remain on the path to seamless cargo movement. Mr. Okhiria identified obstacles hindering the integration of the rail link and highlighted the burden of cargo handling charges impacting traders at ports.
It's not the cost on rail movement, it's the cost involved in multiple handling, because you have to move it, load it at the terminal, and when you get to the end point, you have to also load on the vehicle to take it to their various factory or warehouse. So it's those costs.
To combat these challenges, he stressed the importance of diversifying transportation modes and breaking monopolies within the port system. Ifunanya Eze, TVC News, Lagos.
Well, the securities market closed transactions with weak indices the second day of this week as sales pressure continued in all sectors. Efion Gekop reports.
Stock trading returned to lower zones following sustained sales pressure in the various market groups. The all-share index that measures price movements on the trading floor dropped by nearly half of a percentage point, touching straight on losses in portfolios. It was GT Holdings that took the biggest price fall of almost 6% as investors traded off its shares for cash ahead of the exercise aimed at raising capital base ordered by the Central Bank of Nigeria. Other big banks and MTN Nigeria also crashed their prices under the influence of losses. 425 million units of shares were moved across sectors of the market, while the trade volume showed 8.3 billion naira. Trade gainers with marginal performances include Presco, which runs oil palm plantations in Edo State, Wema Bank, NGX Group, Wando, and Unilever. Analysts still hold mixed view about trades in the coming weeks. Efion Ekop, TVC News, Lagos.
Finally, in business news, crude oil prices stayed mixed today. U.S. West Texas intermediate crude rose to sell at $78.67 with an upsurge of 0.24%. Brent also experienced an uptick of 0.23%, sell at $83.52. Bonny Light, the downward review of 0.48%, selling at $84.45. And the OPEC basket dealers are offering $83.79 with a decline of 0.52%.